Alright guys, back with another video. So this one is going to be a quick one, I hope. I'm planning to do this like 10 minutes video once more and we'll see how that go. But so this one is inspired by Moran's video tearing Tony apart right here. Of course Tony is the one that did a video about GameStop earnings recently and saying that that GameStop cannot be in the S&P 500 and you know, because this and this and that, right? And this segment right here where Moran's kind of like pointed out the company at the bottom of the top 500 company. So this one right here is the one I'm going to focus on, and maybe if we have some time, we're going to do Lumen technology as well. So let's take a look at those and we'll see if it's better than GameStop or not, right? Okay, so I've got one here. If you look at the company right here, so this is the 500th, okay, company in the S&P 500. So right off the bat, it's under $1 billion already. Of course, it went down the trading day yesterday, down 3%. The revenue coming out to be $1.1 billion. Yes, they did have some net positive trailing 12 months. So that's what we wanted to do for GameStop. I'm sure we're gonna kind of get to that. And then I'll show you why it's not good. Okay, so the price target for this one, let's look at the forecast real quick. It is a sell. Okay, at least they are claiming certain things here. Perhaps maybe too much debt, but we'll see in the other more in-depth right here. So far though, the outstanding share is around 57 million shares. So it's a very small float company right here. Of course, the analysts want you to sell off of this. So I'm going to do a trailing 12 here income statement. As we see, it's $1.1 billion in revenue. Gross profit margin is pretty high. Cost of revenue went up a little bit, not by much. SG&A went up. Expenses, operating expenses, that's not too bad right there. Went down. So income went up. That's pretty good. Not quite sure why the net growth is in the negative. That's concerning. Is that because it has some goodwill or no? No. Hold on. It's not on that page yet. So cash flow, it looks like it's lower than the actual net. Perhaps there are some shares being sold to the market. So the free cash flow went down pretty substantially from $300 million or so to $41 million. So it seems like they're paying dividends right here. As far as the gross profit margin and profit margin, it's pretty good, but it went down from 8 to 4, now to 6 again. But they used to have more profit, higher profit margin than this last quarter right here. So let's look at the balance sheets right here. Cash on hand's pretty high. That's good. I guess for now, inventory went down by $20 million there. Now, if you look at the asset right here, right? versus liability. So right off the bat, though, you see that there is a long-term loan right here. Long-term debt is a lot higher than the actual asset. So there you go, a trouble in the 500 company right here. So why is it still in here? Can it be kicked off? And another thing too, look at the shareholder equity for this company right here. It's in the negative. So GameStop beats them through and through in terms of market cap, in terms of debt to equity ratio. I bet you anything, it's probably really bad if you look at this one right here. Oh, it's not even computing. It's so bad. Now, if you look at the debt right here, we kind of see it there, and then net cash, it's in the negative. As far as this score right here, under 3, it's a increasing risk of bankruptcy. And so that is concerning for this company right here. What else? Right here, so equity to book value, it's in the negative. So yeah, what gives, right? So that's that. And what's the second one? So the Lumen technology. So let's look at that one. I have about 4 minutes right there, or a little bit more. Lumen. Hold on. I think I spelled that wrong. Lumen technology right here. All right. So right off the bat, of course, market cap is $1.48 billion right there. Enterprise, that's pretty good. I guess it's higher than the market cap. Insider ownership, only 1% there. Gross profit, $7 billion. Net income, $11 billion to the negative. Wow, you guys. And then the debt to equity ratio, loads amounts of debts here. So look at the profit margin. So what's going on here? This is the 499th, the 499th company in the S&P 500 right here. So there you go. And then what happened there? So if you look at the income statement right here, $14 billion, down from gross profit right here. Cost of revenue is 7. Operating income, when $11 billion less. Holy smoke. I bet you anything they load on debt. I think that is the problem in this company here. So let's look at the balance sheets. Currently they have $311 million right there. Compared to GameStop, $900 million. If you look at, of course, again, this is a different industry in general. I get it. People are going to be like, you can't compare, different industry here, but at least you could compare asset versus liability, right? And wouldn't you want to have companies that have positive share equity? And even if there's positive, the amount of book value is going to be a lot better than the actual share price, right? Or the value of the company. So currently, yes, it's undervalued right here if you were to look at the book value. However, the reason why it's undervalued is because of look at that. So the long-term debt for this company is $19 billion, okay? And so with that, I bet you anything, the interest payment is probably astronomical. The retaining loss is to the tens of billions of dollars right here. Good thing is they actually have some shareholder equity, but look, it's diminishing by a lot. So shareholder is going to be diluted massively in the near future, right? So currently asset liability, if you look at that, let me see goodwill. It's propped up by goodwill as well. So right now the goodwill value for this company is $9.6 billion, while the shareholder equity is only 2. So if you were to subtract that, the real shareholder equity is actually in the negative. And so that's troubling right there. So these two companies, GameStop could easily beat. All we need is the positive trailing 12 months of, positive earnings. And so, yeah, I mean, it's not very hard to beat these company. And then Dish Network right here, as mentioned by Marantz, and then all of this stuff too. So, yeah, I mean, I'm going to continue to do this segment right here. So we want to take a look at these company over here. Originally, of course, they say, oh, you have to be $14 billion market cap in order to qualify for the S&P 500 and whatnot. But look at these. They're not even 14 billion or anything like that. So these companies are in trouble, and GameStop is doing better. So yeah, the possibility of GameStop going to the S&P 500 is very, 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 very possible. So, all right, that's all I have for this one. And thank you so much for watching, and we'll see you later. Bye.